Morning.
All right. People coming in here.
Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust. It works for primary homes. It works for investment real estate. It works for highly appreciated public stock. It works for private stock. It works for collectibles, artwork. It works for Bitcoin, cryptocurrency. And it's literally, I think, the best kept secret. And not only that is it's new to people, but it has a track record of thousands of closes now, right? At over 25 years, 15 times no change IRS.
My mind was blown, and it's too good to be true. It's too good to be true. My CPA would have told me about it. My commercial broker would have told me about it. No, we didn't know about it at Marcus and Millichap until 10 years ago, and now we know it.
But I'll tell you, you made me a believer when we got the wire from our mutual client who made this work. And it was a real eye-opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty what do you call it? Hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
So using the deferred sales trust allowed them to hold on to those assets. I mean, obviously they're, the legal structures around them, they're not in their names, but now that chunk of money is a cow in their farm, a really nice cow that does some really amazing things tax-wise and allows them to get the income that they need in order to meet their expenses. It's going to extend the length of time that they're going to have income by a pretty wide margin.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty and free up your hand to negotiate at whatever time you figure is appropriate. And it allows you to sit on the sideline, or it allows you to accelerate when needed and accumulate your capital.
So I found you, just so your listeners know, on a podcast. And I'm like, wow, this guy is really leaned in. He's articulate. He's very smart. When I worked in 1031 exchanges, we didn't really talk much about DSTs. We just used them to sort of round out a 1031 exchange. And I never knew that it could be the only solution that you need for a primary resident to take their capital gains and defer it and put it into another property. That was like mind blowing for me to understand that concept, which I learned on the podcast that you were on.
Over our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The deferred sales trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Yeah, so I'd say be early and connect with us and just clarify your vision for what you want your wealth plan to be. And that's just not just your wealth, but that's your time and your energy. That's where do you think the market's at? Like, do you think it's a buyer's market, right? Do you think it's a good time to buy? Do you think it's a good time to be in debt? And if so, just keep buying real estate right now. But if you think it's not, and perhaps you want to wait on the sidelines and have some liquidity, get out of debt and wait for what we call a deal to hit you over the head, then that's why you would use the deferred sales trust, regardless if you're a baby boomer or if you're a professional. But essentially, if you connect with us, we're going to help you map out a wealth plan. And as part of that wealth plan, we're going to write a line down the middle of a piece of page, and we're going to say, continue as you are with the 1031 exchange, or continue as you are with the deferred sales trust, or a mixture of both. And we're looking at all of the pros and cons side by side, and then let you decide what's best for you. All right, everybody, welcome to another Mastermind Capital Gains Tax Solutions. And we're excited for you to be here, excited to answer any questions you have. As a quick note, we're on a mission to help you and or your clients never have to feel trapped by capital gains tax ever again on the sale of cryptocurrency, a business, real estate, primary home, using something called a deferred sales trust, which we believe is the Netflix way of doing things versus the old Blockbuster way of doing things. And we're on a mission. We're on a mission to help you add value and help you accomplish whatever goal you want with your wealth when it comes to selling. And so as a quick kind of overview of what we're going to be covering, we have like the vision of what we're doing here. We have like the deal close story, and then we're diving into the crypto side of this. Cryptocurrency has become the number one focus for capital gains tax solutions and our clients moving forward, as we focus on something that's so highly appreciated and people wanting answers. And so we have some exciting new updates on a few new current deals that are pending right now. That being said, I do want to welcome some of my co-hosts and some of my team members. I have Jake Mellor on the line. Jake, how you doing? And you're on mute, but when you get off mute, we can hear you.
Hey, doing well. How are you guys doing?
Hey, doing fantastic. Look at that hair today. It's looking even better than it did last week. I'm just always surprised how good that hair goes, no matter where you travel. What's that map behind you too? What's happening over there?
You know, we got some exciting things going on here. Actually, at a client's conference room. This is a map with little flags everywhere they have clients, and so it's pretty exciting stuff.
Man, we should start running on the back of this, right? We have a new client we're going to talk about here in a minute, which is a brand new state, and we can start, picking them apart. What do you think, Jake? We can have all of our little spots. What do you think?
I think that'd be a great idea, and we can have different colors for clients in different industries like crypto and everything like that.
Yeah, that's cool. And also want to welcome Pierce. He's a part of EXP with me. He's a luxury real estate professional in Newport Beach. Pierce, how you doing today?
Good, man. How are you guys?
Good, man. I keep getting all the pressure from the people. They're saying, when is Pierce going to be, hosting the podcast? And I say, he's got to get the internet connection up. So what's the latest there, Pierce? When are you going to get that thing plugged in?
I'm probably going to have to go buy an office. I got a quote to get it all like hardwired. It was like $4,000. So I was like,
wow.
Okay. I'm working on it. Don't worry.
You got to close that big luxury deal in Newport Beach, and then you can pay for it, right?
It's not about that. It's the principle at this point.
Yeah, $4,000 is a lot to wire. No doubt. Well, welcome, Pierce, and then welcome, Doug. Welcome, Rebecca. Welcome, Kim, and welcome, Clint. And so let's go ahead and get started here with the vision. Jake, I did a little bit of the beginning, but I always like to hear from you. What is the vision of this mastermind, and what are we hoping to accomplish today?
Absolutely. So we help people with highly appreciated assets reinvest those assets at their selling price or their fair market value rather than after tax. There's very credible and appropriate legal proper ways of doing that. And we help people navigate those treacherous rivers, so to speak, so that they don't have fear of the IRS, they don't have fear of compliance. We hold their hand and we help find them solutions to these problems, so that at the end of the day, whether it's crypto, whether it's real estate, whether it's their business interest or stock options, we've helped a number of different people with various types of appreciated assets be able to continue to reinvest those assets, diversify, and increase their wealth without paying taxes because of the transaction that might need to occur for them to move from one asset to another.
Excellent. And
what
would your role be in it, Jake? Just so everyone knows, and what's my role? If you could tell everyone.
Absolutely. So Brett wears the trustee hat. He represents the assets inside of the trust for the deferred sales trust, which is one of the main tools that we use for this strategy going forward. And I am the financial advisor. I carry those licenses. I'm agnostic when it comes to assets. And so that's why Brett and others with my estate planning team allow me to be a financial advisor and assist in this process.
Perfect. Excellent. Fantastic. So now let's dive into the deal close story of the week. And it's a brand new state. I'm excited about new states. Right now, if I had to count the states, let me see if I can keep it in my head. We have one Hawaii. Of course, we have multiple in California. We have Texas. We have Connecticut. We have Colorado. We have Arkansas. To name a few, we're going pending on a very large deal, a $55 million deal out of Florida. And anyways, this newest one wasn't that big though. This newest one was about $1 million deal, and it's for a gentleman in Arkansas. Okay, I don't know if anyone ever been to Arkansas. So my my father-in-law, he worked for Aerojet, and he'd fly back to this place called Camden, Arkansas. I guess they got rockets over there, and they're doing a bunch of rocket testing, like Huntsville, Alabama, too. Anyways, I've never been to Arkansas, never had any desire to go to Arkansas, but my client is really cool, man, and he's from Arkansas. And in fact, he's a referral from another client of mine who closed about 1.5 years ago, and they all grew up in the billboard business, okay? Which is kind of interesting. It's kind of a mix between like real estate and construction and marketing all like rolled into one. It's like this kind of this niche business where they, would either buy the land or lease the land and then build like the billboard, or buy the billboard or lease out some of the billboard, and all this thing for a really cool business. And he's in he's like his mid-50s, and he's been doing this for a long time. And he's built the business up, and he's selling it for a good price, but he's looking at a big capital gains tax, and this is substantial money for him, right? This is around 30% is going to be wiped out by capital gains tax and depreciation recapture, and then he has the deferred sales trust to defer that. So his younger brother actually sold about 1.5 years ago and referred us. He also sold a billboard business. His deal was more in like the $2.5 million range. And what's interesting about that gentleman, which I'm trying to get him to come on the podcast. He's waiting on that a little bit, but he used to work for Dave Ramsey, and he used to be the person who helped to syndicate the podcast, and like was in the studio recording room and doing all that stuff as he's doing the radio show and the podcast, and so he learned a lot about all things Dave Ramsey. And then he was, he's like, well, but this one, I'm not actually going into debt. I'm like, no, you're not going into debt. You are becoming the lender, right? He's like, yeah, because like Dave always said, like, the borrower is, slave to the lender. I'm like, I guess I'm like your slave, right? Because I'm lending you the money. I mean, you're lending me the money, right? And I'm the borrower. So I'm like, you're not, so he had to understand that. And he go, okay, that makes sense. That makes sense. So he felt really good about that. So much so that he referred his brother to us, who just did the deal. And we closed as of like 2 days ago. So there was no real hiccups in the deal, no real roadblocks. It was pretty smooth. The biggest things for people, if they don't know us, is getting to know us, trusting us, trusting the process, trusting that it's legal. But after they pass that, it's pretty simple because we just do the math, right? So he looked at the math, it made sense. He had some questions about investing. He's wanting to be more passive. He's not wanting to be as active. So he's probably going to be more in securities, more in the stock market, although he is looking at some real estate investments, but he wants some liquidity. So that's him. That's the story from Arkansas. Jake, any thoughts on that?
It's a pretty...
Meet Mark and then meet some investors.
Anyway.
Pierce, put yourself on mute, buddy, if you can.
There you go. No, I was just going to say that it's a pretty good story for a standard deal. I mean, the dollar size is a good dollar size, but what I'm getting at is the standard deal is a deal that comes in. There isn't a lot of hiccups. We've done this so many times that everything is pretty easy for us to facilitate. But at the end of the day, there are other deals that are more complicated, even if they're smaller dollar amounts. There's deals that have debt associated with them. There's deals that have callback depreciation associated with them. There's deals where there's multiple owners. Sometimes it only works with one owner, sometimes only the other. So I think this is a pretty good mainstay deal for pretty much maybe, 60 to 70% of the deals that come across our table. Explaining how things work, how the relationship with the trustee is, the financial advisor, and how assets are moved into the trust. And then the trust is the entity that sells out of those assets. So then the trust can then either reinvest in diversified assets or participate in joint ventures for other deals. And so I think it's just, the spotlight deal of the week is a great opportunity for us to show people out there what others are doing and what's normal, what's common, and also what can be done, because occasionally there are those outlier deals that are a little more intricate.
Yep, exactly. And this is more of a plain vanilla one, which is great, which actually leads into a second pending deal that's been kind of a nightmare because, and this is like what don't to do, right? So I had originally talked to the clients about a year ago, prepared them, prepped them. Hey, be early, be early, be early, be early. They're out of the great state of Massachusetts, and they're selling their primary home. And whenever you're selling your primary home, by the way, too, there's another emotional thing that's connected there. And whenever someone's buying to move it in as their primary home, it's like the intensity of the emotions like double versus like the investments. Like there's emotions in investments too. But I want you guys to picture this. Like I literally told them a year ago, I'm like, just be early, be early. Like, oh yeah. And by the way, they're in the real estate game. They're very sophisticated. They're smart folks. They do a lot of deals. It's not like they're immune to this. I think they just got a little bit disorganized. But essentially, they called me like a week ago, and I'm like, I'm in Denver airport on the way to fly to New York with my wife on a 12-year anniversary, and his name's Tom, and he's like the great Boston accent. He's like, Brett, and I can't even do the Boston accent, and he's like, I'm like, what, Tom, how you been? Well, we're closing on a property. I'm like, okay, when? He's like, well, next week. I'm like, all right, and he goes, I'm like, well, have contingencies been removed? And correct me if I'm wrong, I may have shared this last week or not, but I went through this whole thing and it's like, so just like, it was crazy. So literally like, I'm having to put out fires and calls, and it's just like this whole mess. And the escrow people are upset because they thought the deal was a done deal. The buyers are upset because they thought it was a done deal. The sellers are saying, oh no, we got this little contingency remaining so we can still do it. But fast forward, we're still working through it. I've had to go and change some things on my side to get authorized signership because we're assigning it to my LLC or to the trust, which is owned by my LLC. All this stuff being doing. So what the answer or the lesson for this week is, please be early, right? Be early with your preparation. Be early with the professionals you're working with. You can't blame the escrow people for being upset or the attorneys that are representing the buyer because it was thrown on them last minute, right? No one likes surprises. So just be very considerate of other people and what they're doing. And even though they have a big, it's about a $300,000 tax liability, or about $200,000. Like that's great and that's meaningful for you, but everyone else has done all the work and they're ready to close, and now you're holding it up because you weren't early, right? Now, had they been early and we had prepped them, hey, it's a smooth process, but all of a sudden it's a fire drill and it was a mess. And so it's still kind of a mess, and I'll hopefully report back next week that it closes. We'll see. It's kind of in the attorney's hands, but that is the what you don't do deal story of the week. Pierce, any thoughts on that? And he's driving. So I'm going to go, Jake, any thoughts on that?
No, I think you hit the nail on the head in the sense that, early bird gets the worm. Let's be prepared. Let's not get everybody involved and so far down the process without involving the trust and making sure that it's all set up and ready to go. I had a client actually say, hey, I have some crypto, and I was speaking with him yesterday, and I think I might sell it maybe in a month, but there is a chance I might hold on to it for 7 months. And so if I do it in a month, it's in 2021. If I hold it for 7 months, it's in 2022. Is there any issue with me getting all set up and ready to go and getting my trust put together now, where I might sell out of my crypto this month? Is there going to be an issue if I don't sell out of it this month and if I do wait the 7? And we do like to be a little bit more solid on timing, but at the same extent, the attorneys work conditionally for you And so I encourage that, well, prior to deciding to set it up, let's at least have a conversation with the attorneys and get so far down the road so that at least the conversation, the name, and all the decisions are made beforehand, so that when you do know that, hey, I'm going to pull the trigger, all the attorneys have to do is file for the EIN, and everything else is pretty much already decided on.
You nailed it. And by the way, EIN,
So-
24, 48 hours max, right? So,
Mhm.
so as long as we have everything prepped, ready to go, boom, pull the trigger, form it. Now, with the crypto part, which leads into the next part of the conversation, it's the next challenge can be setting it up at the exchange account. Now, when we first started this whole series about, I don't know, 60 days ago or so, we were like, it took us about 70 days, 60 days to get the first Kraken account opened up. And you can go back and watch all of that. And a number of reasons. They didn't know who we were. Then we make sure we were legit. And then the next one, it went down to about 30 days. The next one down to about 14 days. And then here to report, as of just 2 days ago, we did it in about 5 days. And the only reason it even took a little bit longer was because they were asking for the KYC from the note holder, meaning the person who's selling the Bitcoin and the cryptocurrency, and they just hadn't submitted it yet. And so once they submitted it, it went in. So that was great. In fact, by the time they submitted, it was 24 hours, it was opened up, and that's great news. So we're hoping to just shrink that down. But we cannot submit until we have the EIN, right? Till we have the EIN. The other thing that was actually interesting too, and I guess it's good to mention here out loud, is we need to open up a bank account in the name of the trust as well, because part of what, at least what Kraken is requesting, is proof of address, and part of that is having the bank account open that has a proof of like a bank statement or a utility statement. But the trust itself, the only way to really book that is to the bank so far, at least in my mind. I don't know if there's another way to officially do that, but that only takes 24 hours to open up once we have the EIN. So everything hinges on the EIN. Once we get the EIN, everything else can be opened up. We can submit everything else. So to answer your question, Jake, no, if you feel like you might be selling in a month, let's get it set up. Let's get it ready to go. If for some reason you don't do it, no problem. We'll push it off to the next year. And you'll do it. You could do it then. And if you don't end up doing it, then you still don't owe us any money. So does that answer the question or clarify anything, Jake?
No, I think it's very helpful. It gives people a proper timeline so that when they need to be early, it's not a couple days before, especially if it's with crypto, which, if there's any hang up in passing around the documents, we need to make sure that we've got a couple weeks to get that all done.
Right.
One other question in regards to crypto that I had the other day, and maybe there's someone else here on the call that can maybe help out with that. I don't know, Clint, if this might be something that you can speak to, but there's the on exchange and there's off exchange crypto. Mm-hmm. And there's the DeFi market, so to speak. And in explaining to some individuals that they need to consolidate some of their coins and move it over into an account so that it's sold out of that account in the name of the trust, they brought up a point that there's some of these DeFi or there's some of these off-market coins that they have. And trying to figure out how to get those in the name of the trust. Can they open up another DeFi account in the name of the trust? Not with Kraken, but with wherever they have their DeFi. I don't know if anybody would like to speak to that at this moment.
So Jake, can you hear me?
We can.
Okay. So that's a little bit harder with the DeFi. Obviously, some of those coins that they hold aren't going to be on Kraken. And I'm assuming you guys decided to open all this with Kraken because they are a bank. They're an official exchange and a bank. Is that correct?
Exactly.
Yeah, they had several requirements that made it easier to work with them.
Yeah.
But
they're probably
for
going
that
to have
DeFi,
to.
Go ahead.
They're probably going to have to consolidate those coins into one that Kraken has, and then transfer it to Kraken.
All right. So within Kraken, the entity, they have other DeFi accounts so it would just be two accounts within the trust, so to speak. Both could be with Kraken, but one's a DeFi off exchange and one's an on exchange is what I'm understanding.
Okay. I didn't know that Kraken did that, so I'm
Well,
not
I
that
don't
well
know that they
versed on
do.
Kraken.
Yeah, I'm not sure that they do, but I guess whether it's with Kraken or with Gemini or with somebody else that works with the off-exchange accounts, I would presume, Brett, that we need to consolidate those somewhere also in the name of the trust. And if it can't be with Kraken, it had to be with another institution.
Yeah, this would be my question for Clint and for Jake too. So let's imagine you're in this DeFi account, wherever that's at, however that's being traded. Like, imagine you were to just sell out of everything. I mean, is there a way that do they have any statements? Do they have proof of where it's at? Like, how would you report that to your CPA, in other words, right? Let's say you had 10 million bucks, you're going to sell it. How would you report that? And if there's a way to like track that and see that in this DeFi account that you have, then I don't see why we couldn't also open up, in the name of the deferred sales trust, right, a DeFi account, and then just do the transfer there, right? Now from there, now I hear what Clint's saying, right? Then perhaps we might have to consolidate to a coin that Kraken actually accepts, right? And in that scenario, since let's just say it's $10 million worth of certain coins, right? Where we basically say, look, well, we bought it for 10 million, right? From the person, right? And so we have it here, and now we're consolidating all of that into, let's say, Bitcoin, right? Converting it to Bitcoin. Then from there, transferring that to Kraken, and then from there to USD. That might be a route. Any thoughts on that, Jake or Clint?
Well, my understanding of DeFi is to not have it be tracked. That's why you're seeing all this pushback from governments and different things on it. So that's a tough one. I don't know. I'm not one of these because I'm an older person and know how the worlds work. I'm not one of these that's saying down with the banks, because I don't think it'll ever happen. But a lot of those people in DeFi are, and that's why, is because they can do that kind of anonymously.
Yeah.
So that's a tough one.
Well, and I think that there's several people that have maybe participated in that arena that, whether, I don't want to say getting cold feet, or maybe they just, they'd like to be able to be transparent, even though it was a novelty or something of that nature, or maybe it was for a period of time their philosophy, and it might be changing now. With the deferred sales trust, we're able to actually be completely transparent about all of those transactions, as long as things are done in the right order. And so it is possible, I believe, that we could do a DeFi account in the name of the deferred sales trust, and consolidate those coins inside of that account and use it just like we do the Kraken account.
Yeah, that's a great question. And my thought would be, or great thought, if someone were to cash out of a DeFi account, how do they do that? Clint, maybe you know the answer to that.
Well,
or Pierce.
I will say that a lot of these like DeFi accounts don't report to the IRS because they're not like, some of them aren't.
I know they don't. You're supposed to self-report, right? But my point is, how are they doing that to actually, like, if I have 10 million in a DeFi account and I want to get that to USD, what's that order? Maybe Doug, you want to jump in? You know that one?
I do have a scenario that I've kind of gone through, and I guess just a question. When you guys talk about whether it's the accounts with Kraken or with some other, for example, there have been some coins, tokens that I wanted to purchase, but with Gemini, I was very limited. And so, then I had to go through the process of converting, of taking money and transferring it over to, let's say, Binance, for example. And Binance has a different selection than Gemini will have, just like Kraken has. They've got a lot of choices, but they don't have all of the choices. And whether it's a DeFi or some other type of token or even some other type of stable coin, I've had to go through that process where I've had to pay gas fees to move money into some type of account that I could then start trading with. And so when you guys, I guess, maybe limit yourself to Kraken, it might be an issue if someone has a coin or token that Kraken does not have. they might have to convert it into something that to then get it over to Kraken? Or will you guys have to maybe establish some trust account with that other type of exchange that you're not already on? Kraken's great, but you know, I mean, I've got Binance, Coinbase, and Gemini, and I only it's not because I want all of those. It's because I wanted options to choose the type of coins or tokens or currencies that I wanted, the ones that I was tracking and wanted to invest in. And so it's an interesting question, and you know, and like you guys have said, I don't think it's about not wanting to report. Regulation is coming. I am looking forward to it because that will increase the adoption rate for everyone else that is interested in the space, but just not yet comfortable. So anyway, it'll be interesting to see how it plays out and to see how you guys develop your mechanical processes to deal with people that are across different exchanges that don't just have Kraken. They're going to be multiple exchanges, and probably something you guys want to address early and be early in that space as well, so you're prepared for people that have that issue. I'm hoping to have that issue coming up. As long as the market keeps going well, I'll be looking to trade out and do some different things. But
yeah, and just to verify, we do work with other exchanges, just that Kraken has become kind of the quickest. What was that,
Pierce?
I said, why don't you just get a wallet that can hold the DeFi coins? So like the trust would just have a wallet, and it doesn't have to go onto an exchange necessarily, but you just collect them into the wallet, and then from there, right, your basis becomes what you paid for it, and then you can transfer it, you know, and just have like your own like accounting system that you report to the IRS yourself.
Jake, any thoughts on that?
It's interesting.
So, I mean, I think there's a few more pieces to the solution, but that's definitely going down the right path. Again, from an accounting perspective, we want to make sure that there's proper audit trail for the IRS and that nothing's being hidden or nothing's being excluded, but that we provide them the path they want to see. That's what I call a breadcrumb trail. From an audit standpoint, that we want them to see from the beginning to the end, and that, you know, as it's entering or being deeded over or transferred in kind, the coin moves over, that it's that coin that's sold in the name of the deferred sales trust itself. And so it is a little bit immaterial what marketplace or what wallet it's in, as long as it's in one that has the name of the deferred sales trust over it as the wrapper, so that the sales proceeds fall into that wrapper or fall into that entity, which allows for continual deferral of these transactions. And that's the big kicker right there. I mean, think of it as a 401k. When you buy and sell stocks inside of a 401k, you don't owe taxes on those transactions. Those transactions are continually deferred forward until some future date you take a distribution from them. That is similar to how the trust works, the deferred sales trust. As long as we get the assets in there, we can exchange out of them, we can sell them, and we can reinvest them. And those transactions are not taxable until at some future date there's a distribution.
So let me
that's the key point that I think that we're getting to.
Let me jump in and ask this way. So, and maybe it's for Pierce or for Clint or for Doug. So when transferring, let's just say, some DeFi coins into a wallet, right? You're not selling it, you're just transferring it, right? It's in other words, let's say you have 100 coins worth 10 million. Can you transfer all 100 coins into said wallet, and then said wallet transfer it to sell it to USD the next minute? Like, Clint, how do you see that?
Well, I was just going to ask, I think it's Doug that's in the car, maybe, or
Pierce.
Is he talking of something like a MetaMask wallet? Because I know most coins are available on like a MetaMask wallet. So if you set up one of the, I don't have one. I've been thinking about getting one, but worried about the tax implications of it. But if you have a MetaMask wallet, you can keep your coins there, and you can switch them, you know, trade them in and out between coins right there, which I understand is a taxable event, but maybe if that MetaMask wallet is held within the trust, you could do that. And then when you're ready to cash out into US currency, you could, from that MetaMask wallet, you could transfer them all into a coin that is on Kraken and send it to Kraken and then cash out.
Can I add to that, please?
Sure.
I think the difference, what we're talking about is custody versus ownership. So when you're transferring from your wallet and your wallet address is sitting, for example, on Gemini or Kraken, if you transfer the custody from those exchanges into your wallet, you're not selling your coins. You're not creating a taxable event. You're just having the custody in a cold wallet or sitting on one of those exchanges. And when we have the taxable event, that's when Brett and Jake come in, because they want to deal with the right reporting and taxable deferments. The issue that I believe is that if you have some coin or you've got your currency that's not on the exchange, on the Kraken exchange or Gemini or wherever, they are going, it sounds like they're going to need to have these same relationships like they do with Kraken on different exchanges, so that when the ownership changes, it goes into the trust. And that way they can deal with, like Jake was mentioning, it's how did you say it, Jake? It was, so it's you've got the right the ownership of those coins, it transfers in properly.
Yeah. So that if there's any audit trail, everything is transacted in the name of the trust, transferred over into, and then transacted out.
Yeah.
So
I think that's a
good discussion
to go through. Keep going, Jake.
No, I was just going to say that.
Jake,
I mean, when it comes, go ahead.
Sorry, I was just going to say, could this all be solved with what we've kind of set me up in? Is because I've got that coin that's in the lawsuit, so it's not on exchanges right now, whatever. But hopefully it will be in the future. But just in case, we've set up a personal business of mine, a crypto business of mine. And within that business, I could hold all those wallets, right?
Yeah, and that's there's a preferred way to do it based on the laser focus of the attorneys, which is to have these things in the name wallet that's in the name of the trust. That has been a little bit more of a preferred way. Having the LLC manage and own and having all of the coins in a wallet in the name of the LLC, and the LLC being wholly owned by the trust, is another level in between. And it still works, it still functions. Again, the preferred method of the trust is just to have direct, from the trust itself, ownership of wallets. So that if there's any share exchange in the future of your LLC and everything else, that there won't be any questions.
We lost him. He'll be back in a minute. Keep going, Clint. Keep going.
Well, I understand that, and hopefully I don't have to even use what we set up, but we set it up just in case the lawsuit doesn't get finalized or whatever, and my business owns the wallet that I cash out in. Hopefully I don't even have to use that, and I can just transfer it all to Kraken when the time comes. So, but that was just an avenue that we set up behind the scene just in case.
As a backup plan, so to speak, just so that the entity itself that's managing and owning it is also owned by the trust.
Right. Okay. That makes sense.
But to that point, I think it's important to get, we're going to work on Gemini. We have put it out for Coinbase to open up over there. I haven't put it out for Binance yet, but I should put it out for Binance and Gemini and see if we can get that done. Because you're right. I think it's important to have multiple coin exit plans, right, for each particular exchange as much as possible, as well as looking at the DeFi part of it, which I think we'll go back to the tax attorneys, Jake, on the next week's call, Jake and I have another very, very large exit potentially for a cryptocurrency holder. And let's ask about that because in fact, I think he might be DeFi. In fact, I think that's for that one.
He
Jake.
does. He
Yeah.
does have a
So
substantial
this is
amount of
timely
DeFi.
that we're bringing this up, and I appreciate everyone sharing their thoughts, and we'll obviously report back what we find. But that's what we'll have to clarify, right? Whether or not we can just transfer it to the wallet, right? No matter how many coins or whatever DeFi coins it is. From there, once it's in the trust, let's say ownership, right? Then they can sell it or convert it to a coin, which then can be transferred to a Kraken or a Coinbase or whatever, and then from there sell to USD. And that's in my mind an initial potential path. If that's making some sense, is that making some sense, Jake, and Doug and Clint and Pierce?
It does.
No, I think it helps out.
Excellent. I'm going to open up for
And
Gary
again,
and Rebecca
for
right
what
now
we've
too.
seen-
I think we also had maybe Luke. Luke may have jumped off, but Rebecca, Gary, welcome, Gary, and then Rebecca. Any questions right now? Thoughts?
No questions. Love learning all about Bitcoin and stuff. This is pretty incredible. So
Awesome. And Gary, how are you doing?
I'm good. Happy Friday. I mean, just being honest and admittedly, I know nothing about Bitcoin or any of this. So this is all like very, very new to me, you know, and I'm here to learn a lot of different aspects about the trust and DST. And it's interesting conversation that I might not be having right now with a lot of my clients, but I feel like in the future it will be. So I'm just trying to absorb it and listen. But if I look confused, that's why.
No, all good, Gary. And by the way, this is actually really cool because your expertise is in real estate, right? So
Correct, yes.
Cabo, San Diego, right? Those two major areas.
Correct.
And just having your antennas up, it's like if you buy that new, BMW, all of a sudden everyone has the BMW. Like just having your antennas up about, oh, crypto can defer tax, and oh, I can sell primary homes or save a failed 1031s with a deferred sales trust. You'll be surprised that, and this is part of the vision of this mastermind, is we're wanting to bring the crypto world and the real estate world and the financial advising world together, right? And traditionally, generally speaking, each of them are pretty separate in general, right? Stock market people aren't necessarily real estate people. Real estate people maybe aren't necessarily crypto people. We definitely know crypto people just not the stock market, right? But is there a way with the deferred sales trust, because this tax, what's called the big elephant in the room, that's the one who's in the middle. I mean, that's the government in the middle, like just grabbing from everybody, right? And we want to make it very, very, of course, legal and efficient and connect the worlds. And so your expertise, Gary, is really important because there's people who want to build a hotel in Cabo. There might be people who come on this mastermind and are like, hey, I'm selling $20 million of crypto and I want to diversify into a hotel opportunity in Cabo. And you're like, great. I've got an opportunity for you, right? Or I want to buy an investment property in San Diego. So that's the vision. We want to bring the experts from each part of it. No questions are bad questions. We're all here to ask them. And with that being said, are there any questions from anyone right now on anything on the deferred sales trust?
Yeah, Brett, I've got one.
Yeah.
So we've been hearing a lot of, whether it's to scare us or not or whatever, but Biden passing some sort of bill that takes unrealized gains and stuff like that. Does this deferred sales trust, does that help with that? So that's not even an issue?
It does. And so in fact, whether or not it's not even an issue, it will depend on what finally comes out and how they interpret it, right? Because they'll pass a law and then the IRS interprets it and then they enforce it and there's this whole thing. But the key here is being able to defer long-term or short-term gains, okay, using the deferred sales trust, right? Now we have to use the DST plus for short-term, and it has to be large enough. Can't just be small. It's got typically they're stop for $5, $10, $20 million deals. And then you have the DST regular that was all for long-term, okay? So the nice part about the deferred sales trust and IRC 453, it's not a part of the Biden tax proposal to make changes. Part of why we believe that is the case is A, it's kind of, let's just say it's not as much on their radar as something like the 1031 exchange or some of these other things. But B, we believe it's the foundational part of the economic, let's say, safety of commerce. So in the 1920s or during the Depression, when a lot of tax laws came into place,
part of why they put IRC 453 in the place is to allow individual people, the citizens, to carry back paper to incentivize transactions. In other words, if Doug wants to sell a $50 million business, but he's going to pay $20 million of tax, he might not even sell the business, even though his return on equity is low, and he could take that $50 million and go reinvest somewhere else, right, and spur economic growth. He might just say, it's not even worth it. I'm going to hold on to it. And that stifles growth, right? That stagnates the economy. And so the second part is, we don't believe, at least let's hope not, the government never wants to become the full bank. Because if they become the bank, the whole world is basically over, right? If they're going to be the ones who control all the stuff. So they want to encourage the individual to be the bank, to do commerce, to make deals. So the answer is we're like I'd say a really great solution for a lot of Biden's proposals. In fact, I would say Biden's our number one sales professional right now. Every time he gets on and starts talking, the business starts rolling in. So hopefully that answers the question, Clint.
Great question.
Anyone else? Any questions or thoughts?
So, quick question, and I'm sure you've covered this before, but I'm curious to know about what the minimums are. It's easy to say, hey, and you often use this number, Brett. We've got $10 million. But look, most of us don't have $10 million. So what are the minimums? What does it make sense? When does it make sense for someone that's, got, maybe they're selling $1 million business, or is it, are the minimums less, more? Where is that sort of threshold that it makes sense cost wise? And
I'm going to pass that one to Jake. I've answered it a lot. So Jake, you want to take that one?
Absolutely. Typically the attorneys, based on fees, based on taxes, based on a number of different things, there's no hard and fast rule, but they like to say $1 million. So $1 million transaction, highly appreciated, not a lot of debt. That is kind of like an easy home run, that and above. And I say an easy home run. Now, if you got $1 million transaction and there's a depreciation, callback depreciation that's going to happen, and if they're highly leveraged, that makes it more complicated. We might be able to do like a base hit or something of that nature, but it's not necessarily a home run.
Jake,
it's still doable.
Now,
could a deal that's smaller,
kind of dropping up a little bit. Your bandwidth is really low because I think you're on the Wi-Fi. So I'm gonna do a little audible here. I'm gonna jump in and make sure everyone can hear it clearly. So the answer is, we found at least $1 million net proceeds and at least $1 million gain. Okay. And we'll start with the home run analogy, right? Or you can say a scale of 1 to 10 if you're not a baseball fan. By the way, the Dodgers are playing the Giants, and oh my gosh, who's excited for playoff baseball, baby? This is when I'm like a kid again, right? I mean, I can't watch like 180 games during the year, but like when playoff baseball comes and it's the Giants, it's like, oh, and it's the first time ever the Dodgers and the Giants, which is crazy to me, right? Like, really, in all these years, they've never had a playoff? It was weird to me. But
are they sure they haven't? I remember in '89 when we had that earthquake. Wasn't it
that was Oakland? That was Oakland A's. Oakland A's.
Oh,
and the Giants.
All right, you're right.
Yeah, I was in Fremont, Mission San Jose, and my house starts shaking.
That's right.
The world, and I go outside, and the bridge fell down, and all the news and everything was crazy.
Right.
But okay, so I got off track. Sorry, guys. But base hit, double, triple, home run, right? So we found that home runs, if it's $1 million net proceeds and $1 million gain, no matter where you're located within the U.S. By the way, the deferred sales trust is only applicable to U.S. capital gains tax. Okay, whether you're a foreign investor or you're a citizen, doesn't matter. If your asset that you're selling is subject to U.S. capital gains tax, the deferred sales trust works for you. That being said, no matter what state you're in, is like Nevada or Florida or Texas, these really favorable capital gains tax rate states, if you have $1 million gain and $1 million net proceeds, what's a gain? Well, let's say you bought crypto for $1 and it's basically worth $1 million plus one. It's $1 million gain. Well, Brett, if I only had 900, could I still do it? Yeah. Did we do deals at 700 this week? Yeah. But the pain's got to be big enough. What do we like the pain to be? Well, the pain is the tax liability, which is typically 30 to 50% of the gain. Okay, so if it's $1 million, $300,000 to $500,000. Okay, could be that, right? If it's at 250 or 200, can we still do the deal? Yes. Okay. So is it like a triple or a double, potentially a single, right? Or a scale of 1 to 10, a 1 or a 2 versus a 9 or a 10? So there's kind of this range, right? And so remember, we don't get paid unless you do the deal, right? And so we love to work with people. And if the motivation is very high, and here's the other part of this equation. How soon do they need the money to spend on personal stuff? Like we have some people who say, hey, I got this high-end luxury home I want to sell in the Bay Area for $5 million. Can I defer all the tax and then go buy a primary home with it? I'm like, no, it doesn't work that way, right? The law says it's got to be business or investment purposes to keep the tax deferral. So you've got to figure out what they need. So if they need the money to buy their next primary home, or they're not willing to leverage that next primary home, guess what? It's not a good fit. So it's not a one size fit all for sure, Doug, right? But that's a good rule of thumb. So we say, well, Brett, what if I have two properties at $500,000 or cryptocurrency of $500,000 and a real estate property at $500,000? Could I combine the two? Yeah, you could, right? Now, if we say, well, what if I don't know for sure if I'm gonna do that second one? That's okay. Do the first one, okay? Right? Just know that it might be like a double. It might not be a home run until you're getting this equity so big in there and this tax so big deferred that this is like a cash flow machine, right? But if the cow is too skinny or the tax is too skinny, you're gonna be calling me up, Doug, and saying, all right, Brett, well, I could have paid $70,000 of tax, but I'm paying about 2% in recurring fees right now. And, I'm going to be like, Doug, I told you at the beginning, it's like a base hit. Just pay your tax. And not that you're going to be doing that. And that rarely happens, but that's kind of the point. Does that answer the question, Doug?
Yes, it does. Thank you.
You're welcome. So that being said, we are running out of time. Any other questions from anyone else before we let everyone go? And welcome, Dana. Glad to have you. And if you want to unmute yourself, I think you might be new to this. So we'd love to have you say where you're from and what your focus is so you can meet the group. We've got Doug out of Oregon. We got Gary out of San Diego and Cabo. We got Jake out of Utah. Clint is at an undisclosed location somewhere in the Midwest. And then I'm out of Northern California, but or not, you don't have to jump on either. That's cool. Anyways, anyone else have any questions? You can put them in the chat. You can also just unmute yourself. And Boston, cool. Well, welcome Dana from Boston. And so we're actually doing a deal right now in Massachusetts. We're seeing if it's going to close. It's kind of last minute. So glad to have you. That being said, again, last call for questions. Otherwise, we're going to wrap it up and then we're going to see everyone next week. Anyone else have any other questions? Cool. Jake, thank you for being on, co-hosting with me again. For folks who want to reach out to you and find you, what's the best place for them to find you? He is stalled, so I'm going to jump back in.
1-800-77.
Okay, I'll just say you can find him at alphamarktax.com. It's Jake Mellor, okay? Financial advisor, CFP, MBA. He is my business partner and love for you to connect with him there. You can also find me at capitalgainstaxsolutions.com. Just make sure if you connect with Jake or I, just mention you saw us here on the Mastermind. Doug, remind people where you're from and where they can find you and what you focus on again.
I'm Sacramento, California, so I'm not too far from you, Brett. And
I think Oregon. First time I thought Oregon.
Yeah, I don't know. I think it's because of my virtual background, but I am in cloudy Sacramento, California today. My focus is primarily in the residential real estate space, and I spend most of my time coaching and mentoring other agents.
Amazing. He's with EXP. He's another EXP gentleman, and so is Jake Miller. He's joining here soon. He's getting his license. Gary, would you share where you're from and your focus real quick for everybody if they want to find you?
Yeah, thank you so much. Again, Gary Massa, also with EXP. Doug, I have a small team here in San Diego, and I also have a business in Cabo San Lucas. I work for a broker there. I help people move from or invest and retire from from the States into Cabo San Lucas. Also do apartment building syndication investments as well to kind of help my clients move their money into other investments. And that's it. Oh, my website is itsyourmovesandiego.com.
Amazing, Garen. Hope to see you in Vegas if you're going to be there. Jake's going to be there.
I will be.
Anyway, Doug, hopefully you're there too. And then Clint, you're invited. Dana, you want to come? You're invited too. And then Rebecca too. I think she jumped off. She's invited. But hey, we're going to wrap it all up. That is it for today. Thanks so much, everybody, and hope to see you next week. Okay.